Hello and welcome to the live trading hour brought to you by the Live Trade Room. I hope you're all keeping well. What we look to do during this session is to look for high probability trades across some of the world's largest markets, from foreign exchange to commodities and also your global indices as well. Just as a word of caution really, today now is the last day of the trading month, but it's also the last day of the trading quarter, and it's also the half-year point as well. So what we often find during days like this is kind of reconciliation. You often see a little bit of profit taking creeping in. So it's not necessarily out and out kind of normal market conditions. So you just want to put yourself in the mind of those that are trading massive sums. If they need to realize certain results by certain time periods, then the end of the month is kind of a time at which they can do that, and also the fact that it's the end of the quarter as well. Okay, so with all this in mind, we do have some ADP jobs numbers coming out from the US pretty shortly, so we shall, if we can start as we always do with our risk warning. Of course, please take a brief moment to familiarize yourself with our risk warning, currently up on screen. And let's have a quick look at this news event. We'll bring up our FOREX factory, and today now is the last day of the month, so it's the 30th of June. Not an awful lot to have to deal with today, to be honest, but we've got let me just move this out of the way a little bit. Okay, so let's go back to that time then. So we're looking at 1:15. We've got the ADP numbers. That's a little bit better. So we're expecting 555,000. Just to show you how that sits on a chart. Let's zoom in quite a lot. So that's obviously our big dip last year because of COVID. Very significant rebound, kind of a flattening out for the majority. Last month's ADP numbers was a major surprise, kind of a 50% uptick in the potential in the jobs change number from 645, and we actually saw 978 jobs added. Now this time we're expecting a lower figure, 555,000. So will it be equally as high? We shall of course wait and see. And obviously, if jobs numbers are positive for an economy, it generally supports the currency. So in this case, it'd be we'd see probably a little bit of an uptick in the dollar. Same true as if we get a negative figure, if it's a poor jobs number than what's expected, then we can probably expect the dollar to start weakening. And we've got a mixed dollar at the moment, so it's kind of between two stools right now. So we'll get into that. The other thing, anyone trading crude oil will have crude oil inventories again expecting another negative number, and there is the expectation for OPEC on Thursday, I believe it is now, which would be tomorrow. I'll double check that now because I know they'd rescheduled the OPEC meeting. So yeah, we've got it tomorrow, the 1st of July. So they're really debating whether the market can support the extra supply that's being planned. So they've tapered supply for quite some time, and now they're unwinding those restrictions. So that'll be interesting for crude oil inventories at 330. Apart from that, nothing really of any major concern. More of a commentary, really. The longer term US bond rates are continuing to dip, as you can see. So we kind of peaked up here at the 175, and now we're down at the 145. So after the initial explosive move from, let's say, the 1% level, we saw a 75% increase, and now we're seeing a 30-point decrease off those highs. So all in all, we're still up. We're still up probably 45% over the course of this year, but the central banks have done a pretty significant job in indicating that inflation's not really a concern. And the market right now seems to be, fully accepting that. Although, the key indicators are increasing at quite an alarming rate, and I'm sure you and I feel that uptick in prices in a whole variety of different areas. But we're told it's transitory, so we'll see if that's the case.
5 minutes now until the top of the hour. We're here from Atlanta Fed President Bostich discussing regionalism at an event hosted by the Buckhead Coalition. There is no text but a Q&A with the audience.
Okay, so let's see what opportunities we have for you today then. So in our trade plan yesterday, when we identify momentum, we generally look to stick with it. So we're looking for further dollar strength. We had to take profit on our pound dollar trade and our pound yen trade, just because of this double bottom type price action that you can see here. So if I just get up my pen, so there is your double bottom, and this now above this level, it just converts itself into potential upside, and the same situation really, this is just on a slightly different time frame, is the pound yen. So a decent move, a decent trade to the downside. We were really expecting markets to just clear these lows, and we failed to actually get down to those levels on a couple of occasions. But you've got to, we want to let winners run when we trade. So we want to give it every chance to sort of continue to make, if we're in the right trend, continue to make that kind of process. If you're sort of getting out at levels that you'd expect prices to break through, and you do that consistently, you're leaving a lot of profit on the table when you trade. That's what you can miss out on. So we want to try and let these winners run. Some markets you get really good winners and they just keep flying and making new lows every time. and other markets like this, we just go through long periods of consolidation, and we're currently reversing actually these markets. The pound is, we're finding a bit of pound strength, probably a little bit of profit taking. So our bias is still to the downside for the pound dollar, and this is often what you see during when we're closing out the month. You get a bit of reconciliation, you get a bit of balance sheet reconciliation. Good afternoon, Finbar. I hope you're well. So yeah, we took profit on these trades today now, as they're looking like they're beginning to reverse. So we shall see. Looking for some further dollar strength, but we're just not really seeing it consistently across the board. So let's have a look at the daily time frame, and we'll zoom out. So you can see there's a little bit of indecision now at these lows. Really wouldn't be that unusual to see this during days like today, which is a bit of profit taking down at these lows. We're expecting prices to just come down just a fraction lower. Failed to do so. That was the level, the 138.12. We kind of bounced off that level, and now we're looking like we're creating a bit of a double bottom off a monthly low. So it's actually like tomorrow, if we break above this high, for example, we'd probably be seeing that little transition phase to the upside at that point. So we'll keep our options open with all of these. Indecision in the dollar yen. The problem with some of these markets, some of these dollar markets, is that we're getting a slight uptick, but we've got these recent highs, and we've got these failures to the downside as well. So we're just, broadly speaking, we're moving sideways. So it is about sort of cherry picking the better opportunities for the right reasons. So the dollar CAD has run into a bit of trouble, so it's kind of rolling back over to the downside. Again, probably likely to be a bit of profit taking perhaps up at these levels as we close out the month. So our bias can still be to the upside. It's just the opportunity is not great. A really good trade was the New Zealand dollar. Sorry, the Aussie dollar. We'll have a look at the New Zealand dollar in just a second, but they're in very much similar positions. Indecision, New Zealand dollar, indecision, are a bearish spinning top, really, I guess, in the Aussie dollar. So the euro pound, it's a technical trade to get in and to look for opportunities around these kind of levels. Got another opportunity again today, but it's really kind of up and down, and you're just expending a lot of time and energy with markets broadly over the last month, pretty much moving sideways, although we do acknowledge there is a sort of bearish aspect to this trade.
Trade balance in rand terms coming in a surplus of 54.6 billion on a prior surplus of 51.2 billion.
Okay, strong rejection of these lows as far as the pound yen's concerned. We see that quite a lot. Bit of profit taking. Nothing really going on in the in the euro yen. Let me sort these markets out in my head. The euro yen. Indecision in gold. The oil markets are an interesting one. Our bias is still to the upside, but you can see we're kind of trading in this quite tight, narrow range, and we would just anticipate this is likely to continue until we hear from OPEC. See what decisions they make regarding increasing the supply of oil. Sort of end of month price action really as far as the S&P is concerned. So marginally, ironically, we're still up at all-time highs, but bit of softness creeping in today. Same in the Nasdaq. Still mildly bearish in the Dow Jones. So we've got bearish market conditions today. So we've got those risk-off conditions, which are likely to support, ironically, our pound excuse me, they're likely to support our dollar and yen trades. Now, yesterday we had markets pushing higher, and we had the dollar and the yen strengthening, and now which is again counterintuitive. And today we've got the opposite. We've actually got softening indice markets and largely weakening dollar and the yen. So it's not. These are markets that are normally quite correlated that are not necessarily adhering to the normal correlations. So we're a little bit put out by that. Although we've still been actively trading it. So bearish market conditions as far as the global indices are concerned. And a bit of a rollover lower as well as far as Bitcoin. So really, I don't know, sometimes trading is just about timing. It's just about choosing the right times to get in, and we obviously don't always get it right. But on the last day of the trading month and quarter, and it's the half yearly point as well, it's really not the most productive time we've found over the years to be trading markets. So occasionally we're a little bit more comfortable just looking to take a break, perhaps for an afternoon. Otherwise, you spend an awful lot of time just sort of analysing markets that are probably unlikely to move to any great extent. Now, the caveat to that is very much likely to be the ADP numbers. If we get some unusual print, some unusual number released, we might get some volatility around that. But we shall absolutely wait and see. So Finbar, I'm just looking at your Aussie CAD. Can we have a check? Yep. Okay, so I suppose the first thing we should probably do is see how the Aussie and the CAD are performing against the dollar. So this one's quite straightforward because we're seeing some Canadian strength against the dollar, and we're getting some dollar strength against the Aussie. So actually, the Aussie CAD to the downside is a bit of a kind of a no-brainer trade today, which is basically what we're seeing. So yeah, we're down at these lows. Because am I right in saying, Finbar, that you've been in this for a little while? If I remember, you were getting into the downside here. But what we are generally doing is continuing its path sideways. Your bias is absolutely spot on. Markets are moving from top left to bottom right, so the direction's fine. This is the level at which we would be very interested in this trade to the downside. Would be a little bit of a breakout of this little zone. Yeah, so you've been short now for about a week or two. Yeah, good trade. You've just got to put up with, probably some of this sideways moving markets. But the first thing you would probably like to see is this market just close below the 92.80 and then below the 92.56. So a very, very good trade there. And you see this low, this 92. Let's see what this low. So there's nothing but air beneath this level, the 92.43. So the 92.50 level approximately. If this market breaks, you'd expect the CAD to strengthen really quite significantly against the Aussie, and you can see how it performs. So potentially a nice breakout trade to the downside. The 93.60. Was that your entry on it, Finbar? 93.60. So there's the 93.60. So you were selling in and around this kind of price here. So really good move. I suppose what we can do is we can probably take this little high in here and the 93.93, I think it is. Definitely if you haven't broken even on the trade, in fact, you could probably actually work with your break-even price now, especially if we break through to 92.80. Bring your stop loss right down to 93.60, which is your entry price, and look to let it go. That's how we would look to trade it. Okay, so with some dollar strength against some of these markets. In fact, the dollar is just picking up a little bit of pace now. It seems these were a little bit more indecisive there just a little while ago, so they're turning a little bit more positive. We're still not too, I suppose one of the reasons being is we're not scalpers, so we're not looking to get in and out for just like a 10 or 15 or 20 pip winner. We look to capitalize on the swing trade, so we'd want to get in at these levels and we'd want to trade it down to these lower levels. But when these markets are at the price at where they're at, and we're on the last day of the month, it just doesn't really stack up too much for us, although there is a viable trade there to be had. My pleasure, Finbar, no problem. So and anyway, the trigger point for the euro dollar would be the 1877. We'd be much more comfortable getting into these trades tomorrow, basically, once that daily and monthly candlestick closes. Tomorrow's the start of a new month, and you generally get new appetite for trading momentum. So a little bit of strength creeping into the dollar. Those are the trades pretty much, especially with the equity market selling off a little bit. So those are the trades to focus on.
Sentiment given the word Bostich now coming through, says economic rebound from pandemic has been remarkable. So as we move into 5 minutes until the ADP employment change for June, we're looking for 600,000 on the prior 978,000. A reminder that we do continue to see that the US say that finding workers has been challenging as employers simultaneously rush to meet a surge in demand. Also a reminder that May's ADP report, when it showed a gain of 978,000 for the private payroll jobs, that was the most since June 2020. Bostich comments on the labour market here, says the United States is 9 to 10 million jobs short these the pre-virus levels, says there's a long way to go.
Okay, 10 million is some jobs gap to bridge. So if you're adding sort of 500,000 a month, you're talking about 20 months, a good year and a half before.
So saying it will take time to get back to a balance on jobs.
Before you're getting back to that's a long time. I'm sure the Fed are probably prepared for it, but it does seem like a long time for these businesses to come back online. And you do wonder what's the fallout of COVID as well for businesses. I mean, I'm sure there's going to be a lot of businesses that will have gone out of business, so they physically won't be jobs there for them. So I wonder what that percentage is. So we get the ADP number, and the ADP number is the prelude to Friday's non-farm payroll, where we can certainly expect some significant volatility as we close out the week. So we'll just wait and see for this ADP number. See what the reaction is. We're expecting 555,000 jobs being added. This is like this forecast. The ADP number is more of the, I suppose, if the non-farm payroll is the jobs numbers coming from relevant government departments. The ADP number is more of a private, it's more of a research-based private number almost. So that's the difference between the two, but it's often been the prelude to the non-farm payroll. So it gives the markets a little bit of a heads up in terms of what they're likely to see. Although since COVID, these ADP and non-farm payrolls haven't really been performing as they used to previously. So we'll take all of this into account, of course, with our decision making. So we'll have this now in just a couple of minutes. So what we'll do is we'll have a look at the euro dollar, and I would expect.
So 1 minute now until we get the US ADP employment change for June. We're looking for 600,000.
Okay, so we're looking for between 550 and 600,000. So let's go down and we'll have a look at the euro dollar in smaller time frames. It's looking quite negative so far. And let's just have a look at the S&P as well, just to see how that reacts to this number.
Ten seconds.
Okay.
692,000, the ADP Research Institute says. They added 692,000 jobs in June. Service providing jobs up 624,000, with goods producing jobs up 68,000.
Okay, so that's a really good number.
At the same time, while I was waiting for the data, the World Bank chief economist says economic recovery in emerging markets is being tested by sharp increases in inflationary pressures. Seen a revision to the prior month's ADP revised down to 886,000 from 978,000.
Okay, so a very significant uptick. So the jobs numbers in the US have been a lot better than anticipated in the last couple of months. So we're performing above expectations as far as jobs are concerned. So apparently there's still like a 10. There's probably a deficit of still apparently 10 million jobs in the US from pre-COVID, and last month we saw close to 1 million being added. This month it's we're realizing 692. So maybe in the next 16 to 18 months we'll be back at full employment. That's what these numbers would perhaps suggest. I'm sure there's going to be a deficit somewhere along the line as well. So what does that mean for us? This should be positive news for the dollar, and it's marginally negative news. And we're seeing a bit of we're seeing the positivity play out in the US stock markets, and I assume it's probably across the board as well. Yeah, certainly not as bearish as they were. Strong rejections of their lows. So actually some reasonable dollar weakness. Again, that's a news event that probably shouldn't influence us too much. There's a little bit of dollar positivity going into this event, and now that weakness seems to be kicking in across the board.
He believes we'll see clearer labour market signs in September as US schools open.
Yeah, of course. So parents do have to manage their kids, and juggle, the fact that they don't have the support from the schools over the summer. So that puts an extra strain on, I suppose, parents just being available for work. It's a tough position to be in. And of course, when they go back to school in September, they're likely to then move back into the workforce and hopefully return to some form of normality. So that would make sense. Probably see a decent uptick in jobs numbers in September. Okay, so we're definitely not seeing any of the kind of moves that would get us too excited about these markets. There's a lot of indecision, a few reversals now, and just indecisive market conditions. So honestly, our approach today is probably to pack up a little bit earlier, and look to get into these markets again tomorrow. So I think we're going to probably do that now.
So as we move into 10 minutes until the bottom of the hour, we get Canadian GDP month on month for April. We'll look for negative 0.8% on a prior positive 1%.
Okay, so when we look at the indice markets, they're broadly indecisive or broadly negative, and then the DAX, similar situation. The Nikkei, there's just a lack of volatility now. So for that reason, we will probably give it another hour or so, and then we'll probably pack up for the day. So we don't want to watch paint dry really. So we'd rather just go and enjoy the afternoon, and then we can do our planning session for tonight, because there's some interesting opportunities in some of these markets. If you look at the monthly time frames. So just the euro dollar, just as an example. So this is a double top. We've retraced. We've broken back below the 120 level. We're now trading below last month's low. So if we break below today's daily low, we'd expect further downside for the euro dollar. The situation in the dollar, like, we've got a complete retracement of the previous month's low. So now, like, if we break below the monthly low for the pound, that's a decent selling opportunity potentially still in the pound dollar. So hopefully some good opportunities are in the pipeline, and we'd be a lot more comfortable getting into trades actually from tomorrow onwards. So for that reason, guys, we'll let you guys go. Thank you as always for joining us. We'll if I leave this back up on the screen, we're back again tomorrow at 12:30, so hopefully you can join us for that. And in our opinion, enjoy the afternoon, and probably don't spend too much time working on these markets. So from everyone here at the Live Trade Room, take care, and we'll speak to you soon. Bye for now.